What's up, guys? I'm Darren Jackson, and today, requested by one of my subscribers, Ms. Miller, we're gonna talk about my stock portfolio. I'm pretty sure I mentioned before that I didn't want to just make a video about just my stock portfolio because I feel like there was no meaning behind it. I wanted to have a point. But sometimes I feel like that is the point. There's a lot of you guys that have subscribed to my channel, thank you by the way, that actually are curious to know what I invest in. So a lot of times I watch the same videos by people that have a bigger platform than I do, and I wanna know what they're investing into. But let me just preface my comments by saying that this is what I've invested in. Make sure you do your own research before you actually invest in the stock. Don't duplicate my portfolio unless you just conveniently love every single company I invested in. And I've made a lot of mistakes with this portfolio. It's still a work in progress, as everybody else's is. I'm in the process of trying to make it smaller, even if that's even necessary. Who knows? There's a lot of companies I've invested in I can tell you every single thing about, and there's some companies I've invested in, honestly, because I've heard about it and I've kind of been lucky in some way or another. So again, Ms. Miller, thank you for subscribing to this channel along with the almost 500 people I have on this channel. Thank you guys so much, but I appreciate you making me talk about something super transparent, but it's the point of this channel, right? So the first company I invested in, it's not the first company I've invested in, it's just on my list, really no specific order. But the first company on the list is Hyliion Motors. So I currently have 4.36 shares of this company. A lot of you guys may not know this, but I talked about this company maybe 3 months ago when I first heard that the merger was announced and that it was gonna be happening by the end of the third quarter. There was no specific date at that time. Honestly, there wasn't any specific date at all until it happened. But I thought it was really interesting, especially because I had just finished talking about Nikola Motors, and that was a huge hype craze, but this company actually had evidence. They actually had miles on the road, so I invested into it at a dollar cost average of about $33 a share. So currently, right now, they're $29 a share, so I am losing a bit, but I do believe in this company. I feel like it's a long play, so I'm gonna hold on to it. The next company is Workhorse. So Workhorse is another EV company like Hyliion Motors is, except they primarily focus on the commercial and delivery aspect of it. They're not really focused on individual cars or like for single people or couples and stuff like that. It's more for commercial base. So I thought that was really cool. They have a lot of experience. They have a lot of contracts with specific companies that allows their vehicles to drive on the road. They're in the middle of this huge USPS contract, which may be announced by the end of this year, which could put billions of dollars in their pocket, which could allow them to have their stock portfolio increase as much as it has already. Actually, this Friday, it increased up to $28, and I believe I bought it at about a $24 price point. So I'm making a little bit of profit again. I am pretty interested in what this company can do. Is it a long play? Maybe, we'll just see. Next on my list is Switchback Energy. I have 4.65 shares of that. I actually mentioned that in a video that I'll put right here last week. So Switchback Energy is an acquisition company that will be acquiring an EV charging company called ChargePoint by the end of this year. That's actually what they're dated at. And ChargePoint, again, has a lot of history. They are already a very successful company. And I honestly saw it as there's a lot of EV companies out there and they're on the stock market. No matter how they've gotten there, they're there. And either you can invest in a couple of them and believe that they're gonna do better than the rest, or realize that they all need one thing, they need to charge. So this is one charging company, happens to be the biggest one. We'll see how this does. I've done pretty well with this so far. I had about a $14.60 cost basis, and it's almost at 15. But again, the merger date hasn't been announced, so we'll see what happens. Okay, so the next is HPQ. Now, I have 1 share of HPQ. Honestly, this is one of the companies I invested into because I heard about it, because this is back when I was in my I need dividends craze, not really paying attention to the history of the company. They're a huge computing company and they're actually doing fairly well. I have been getting dividends. It pays about 18 cents per share and I have 1 share at about $19. So it's fairly inexpensive. I haven't had any major losses off of it. I think I'm at a 0.15% loss overall. So I have a $19 basis. It's a couple cents less. So I'm kind of holding on to this just to get some more updates. As long as the dividend payout continues, it's a small position in my portfolio, so I'm gonna hold on to it. Okay, so next up is Best Buy. I have 0.48 shares. This is actually a company I wanted to invest into back when it was like $80, and now it's in the hundreds, like $116. but I invest again $50 a week into my portfolio. So I put a little bit in there and then put some somewhere else. But I felt like Best Buy was a great company to invest in because a lot of tech companies are rising and they sell products that you would buy at specific places, such as Best Buy. Best Buy is doing a really good job with curbside pickup. And on top of that, one of the things that I feel like isolates Best Buy from a lot of other companies is their warranty, their own home warranty in the form of Geek Squad. So they have Geek Squad protection. They continue to offer that even though you're not going into the building, and it's saving a lot of people money. So I feel like this is a company that will continue to thrive along this pandemic and then some. Next is, of course, a company that I'm sure a lot of you guys haven't heard of. It's called Apple. I have 2.98 shares of this company. I started investing into Apple back when they were about $360 a share. This is before that 5-to-1 stock split that they had a couple of months ago. So I had about 1 share or a little less than 1 share, and then I start growing after or leading towards the stock split. Now I have 2.98. I'm really excited to see what they're going to announce at this next Apple meeting, which should be taking place on the 13th. So a couple of days before this video. So we'll see, even though I am a Samsung user, but you know, unless you invest in EWY, make sure you check out that video as well, then you can't really invest in Samsung. So Apple it is. Microsoft, I have 0.27 shares of Microsoft. Again, it's a fractional share play. It's a pretty expensive stock, at least for me for now. Microsoft's one of the biggest companies, one of the biggest tech companies in the world. Xbox, Windows, all that stuff. And honestly, this was before the situation with TikTok, where they were one of the finalists to acquire TikTok. And I felt like they were going to survive as far as the stock market and as a company prior to that, to be honest, obviously. But I felt like if they acquired a company like TikTok that was a huge craze, especially for Gen Zers, then stock prices would shoot up even more. That didn't work out, but it's still a company I'm gonna hold on to. All right, so ExxonMobil, I have a share and a half, almost 1.6 shares, I believe. Yeah, 1.6 shares at about a $50-ish cost basis. This is another company that I invested into for probably not enough reasons. They pay dividends, and it's an oil and gas company. I currently live in Texas, and oil and gas is one of the 3 largest industries to be in besides medicine and space. So I felt like this was a really good company to be in. And surprisingly, even though it took a huge drop because I conveniently bought it before this huge pandemic, it's still been paying dividends. And I figured, okay, it's right now currently at a share price that's half of what I bought it at. So let me go on ahead and buy a little bit more, hence the 0.59. So we'll see what happens with that. So next up is Delic Logistics. I actually mentioned that in a video that I made a couple of months ago, or maybe a month or so ago, about monthly dividend stocks to, well, not monthly dividend stocks, but dividend stocks to invest in. I currently have a share of that. I bought it at $33 a share and it dropped to 29. But I like this because they are an oil holding company. So they hold pipelines of oil and they're kind of in the logistics company. And as far as in their sector, they're one of the better companies. They pay 90 cents a share every quarter in dividends, and that's an increase as of last quarter. So I'm really looking into that. Hopefully it's not a huge loss for me. Again, it is 1 share in my entire portfolio. So hopefully I have nothing to worry about, but we'll see. After that, we have Nike, one of my favorite athletic companies. I only have 0.59 shares of this company, but I do continue to plan on buying more. One of the most popular clothing companies in the world, has some of the most popular athletes. Their stance that they took with Black people really moved me, creating equality or wanting to be on the right side of that. They're just a great company overall, even prior to that. And they showed huge quarterly results last quarter, which shot the stock price up pretty high. So I'm making some pretty big gains with that. This is gonna be a company I'm gonna hold on to for a long time, not to mention they pay dividends. Next up is Disney. I have about 0.4 shares. Again, kind of an expensive company for me at the time. I'm gonna continue to build up on it. Now, as far as dividends go, they cut those, but I'm still not too concerned about that. A lot's going on with the world, and the majority of the money that Disney made was from their amusement parks. Kind of really can't go to that. And on top of that, their cruises, can't really do that either, at least you may not want to. But I mean, Disney, you know, operates ABC, ESPN, they have Disney Plus, they're a huge company that's being built. And if you watch my video on Monday where I talked about the Forest Road Acquisition Company, those are coming from execs from Disney. Who knows how that's gonna impact Disney? They may have some partnership, all speculation, who knows what's gonna happen. So that's a long-term play for me. Realty Income, the monthly dividend company. I only have 1 share of them. I bought it at about $50-ish a share and they're now at 63. They're a REIT, which is a real estate investment trust. They have real estate in stores such as Dollar Tree, Dollar General, but the companies that are tenants of them are constantly going to be open. They're constantly making revenue, even with what's going on. and they pay 23 cents every single month, and they've been doing that for a very long time. So of course I'm going to continue to invest with OWN, and hopefully soon enough continue to invest more. The next one is the first ETF I have. It is ticker symbol DIV. It's called the Global X Super Dividend US ETF. It tracks a 50 high dividend, low volatility security. So it's kind of similar to another ETF that I have, except that it's cheaper and it pays a 50 cent a month monthly dividend. Honestly, there's some parts of my portfolio that at the end of the day, they're going to be more so for the dividend growth, and hopefully the companies I have with the long-term growth offset the small losses I may make from DIV depending on how many shares that I buy and how they do. But so far they haven't done so bad, so we'll see. Next up is Main Street Capital. I have 2 shares of those. I mentioned that in a video months ago, and I bought those 2 shares at about a $26, almost $27 cost basis, and they're currently $30. Main Street Capital is a business development company. They're kind of similar to a REIT, but not really. They focus on providing customized debt and equity financing solutions to lower middle class companies. They pay a dividend. It's not monthly, but it's not too bad either. And I'm pretty sure Main Street Capital actually cut their dividends, but I'm holding on to them just in case they bring it back. And plus I'm making gains from them right now. So obviously them cutting dividends is helping. So I'm gonna hold on to it for a little while. All right, so SPHD is next up. This is my favorite part of my portfolio. I have 6.36 shares of SPHD. I honestly heard this ETF from a video and was awed by the fact that this is for beginners. This is the top 50 highest dividend, lowest volatility stocks within the SP 500. If you're gonna put all your money into one ETF or one stock, put it into SPHD. Now, the negative is their biggest sector, as I mentioned before, is finance. So with this current pandemic going on, finance has been getting hit the hardest, making their interest lower, making loans cheaper to get, resulting in them losing a lot of money. But I know that's not gonna last forever. So honestly, I'll probably continue to invest little by little into SPHD, especially because they're a monthly dividend paying ETF that pays about 15 cents a month. So I make almost $1 a month. So I'm gonna keep holding on to them. Pretty similar is QYLD. QYLD is another ETF that I currently have about 2 shares of, and they are an ETF that tracks the NASDAQ 100, which is the top 100 traded companies, I believe, in the stock market. And they actually collect the premiums from options that they do every single month. Now this ETF, which I actually compare in my mind a lot to SPHD as far as being ETF that pays monthly, except it's cheaper and it pays a higher dividend yield at about 20 cents. If you look at its history, it doesn't have a lot of growth and drop. It's more so across. So it's a position that if you invest it within your stock portfolio, you're not gonna make too many gains or really too many losses. It's more so a hold to consistently make dividends. And it tracks a lot of companies like Apple and Tesla and Amazon and Facebook. So I would say it's a fairly safe ETF to invest in, but that's just my opinion. Okay, next up is Delta Airlines. They're obviously in airlines. I have 3 shares of those. I think I got kind of lucky. I invested into Delta back when the pandemic started, knowing that airlines were going to drop because less people were going to fly on planes for obvious reasons. So I had an average cost of $23 a share, and they're at $32 a share. So I'm making about $27 from that position, which is really cool. They also pay dividends, which I'm pretty sure they cut. But again, there's reasons why companies cut their dividends, especially if they're a company within a huge industry, especially when stimulus packages will protect those industries when needed, and when they don't need to be protected, they're gonna thrive. So I'm gonna continue to keep the position as is. I probably won't add to it. Hopefully the dividends come back, and then depending on what they decide to do next, I'll keep investing. And plus, I've flown on Delta before, and they're not too bad, to be honest. Next up is Outfront Media, based off of Houston, Texas. Represent. They engage in a business to provide leasing services to advertisers. So billboards, that's pretty much what they do. So I currently had a position with an average cost of $12.82 a share, and they're currently $15.12. So I bought 4 shares, so I'm looking at over a $9 payout. Now they also pay dividends, which is why I purchased them, and they've been kind of suffering, but again, my cost basis is resulting in me making money from that. But as I've said before, I am looking into my portfolio to see if there's any cuts I may need to make, because I am focusing a lot more on growth stocks instead of dividends. But of course I would like the dividends, but I don't have to focus on the high dividend yields. So this may be one of the companies on my chopping block, but we'll see. So next up is Altria. I have 2 shares of them at about $41 a share. They're currently at 40, so I am losing $1, so that kind of sucks. But they engage in the manufacturing and sale of cigarettes in the US. Now, they do pay dividends as well. They pay, I believe, about a little over 80 cents per share. So I make about $1.76 a month. So I'm probably gonna hold on to that for a while. Then I have one share of AbbVie. They are a research-based biopharmaceutical company. They helped me with some of my biggest gains. I bought them at $72 a share, and they're at $87 right now. Honestly, this was another company I heard about, but I've been pretty lucky with the gains and the dividends, so we'll just see what happens. I'm probably gonna hold on to them as well. Next up, I have 2 shares of CVS. They are a pharmacy company. I go to them all the time. I felt like this was a type of company that was gonna remain open no matter what's going on with the world, because at the end of the day, people need their medicines and people need their snacks. So dividend paying company as well, so I'm gonna hold on to them for the long run. 1 share of Hormel. They are a food processing company. Again, this was a stock that I heard that I may want to look into investing in. And it doesn't seem like they have too much news going on, but they've been growing. So, you know, hold on to it. We also then have Target. My girlfriend recommended me to invest in Target. She loves it. It's like a souped up Walmart, which is true. I have 1 share of those that I bought at about $116 or $115 a share. They're $163. It grew really hard at the end of the 3rd quarter or the 2nd quarter, I believe, when they showed a huge profit despite what's going on in the world. So I'm definitely gonna hold on to them. I'm probably not gonna buy anymore unless I do fractional shares because they are kind of expensive. Speaking of kind of expensive, even though this isn't really, I have 1 share of Starbucks, the most popular coffee shop ever. If you watch my Monday's video, Shaq could have made $70 million off of it at least. Sorry, Shaq. Dividend paying company, they're pretty popular. Once they get stores fully reopen around the world, I think they're gonna be fine. Next up, I have 1.3 shares of Coca-Cola, biggest soft drink beverage in the world. They own a lot of other beverages like Fanta and Dasani and Minute Maid and stuff like that. Really popular, really profitable. They're gonna continue to grow. I'm not really worried about them. All right, so next up is another rate I have in my portfolio. It's called Stag Industrial. I currently have 4.7 shares of those. They have tenants that involve just major metro buildings. So I'm pretty sure once this pandemic is over, just like with a lot of other companies that I have and I'm gonna talk about, they're gonna be fine. They're a monthly dividend paying company that I believe pays 12 cents a share. I haven't had that drop or be completely omitted, so I'm gonna hold on to them for sure. Then we have 2 shares of Bank of Nova Scotia. This is probably the most conflicting purchase that I've made since I've set up my portfolio. For one, it was honestly a play that I made just because I heard about it, which you shouldn't do. 2, it has resulted in some huge drops especially ever since this pandemic started. Now they do pay dividends, but again, I'd rather the growth than the dividends at this point. But I'm gonna hold on to them and see if they grow a little bit, and depending on where they're at that point in time, I may take them out of my position, but we'll definitely see later. I have 1 share of Wells Fargo, one of the biggest financial institutions in the world. They're doing really bad right now from their issues years ago up until now with this pandemic, but I'm pretty sure once this pandemic's over, they're gonna raise interest like any other banks, they're gonna be fine. Next, I have 2 shares of Schwab. I actually bought Schwab right before they made their commissions on their brokerage app at $0. A lot of other companies followed and that shot their prices up. I'm still making a pretty decent profit. They also pay dividends, so of course I'm gonna keep them as well, at least at this point. Representing the boring companies, I have Leggett & Platt. They are in the manufacturing and distribution of furniture, basically. Pretty boring, but they have grown for me since I purchased them months ago. They pay a dividend, so 2 big important things for me. I then have WestRock, 1 share of those. They are a paper making company, pretty similar to one in Scranton. I have 1 share of them and they have been growing since I've had them, so probably gonna hold on to them for a while. I have 3 shares of Verizon Wireless. They are one of the biggest telecommunication companies in the world. They roll in 4G probably first, 5G first. They've been growing for me pretty well and they pay dividends. And last up, I have 3 shares of AT&T. I've been losing some money in there, but they somehow consistently adjust their dividend yield for the losses, so I'm still getting paid quarterly dividends. So I'm gonna keep an eye on them. I probably won't add to that position for now, but as long as I'm getting paid dividends from that small position, I'll keep it. So first off, I appreciate you guys actually made it to this part of the video because this is a pretty long video. And I hope that you guys understand that this video is super transparent, but I feel like that's the point of this channel. This is a journey that I'm on and we're all here to help each other out. And not only do I thank you guys for watching these videos, but I thank you guys for leaving your comments, helping me out even with my own portfolio. I get it's not perfect. And I recommend you guys not make the same mistakes that I did, such as not doing your research and only focusing on the dividend yield. You'll definitely become a better investor, and I feel like I have as well. I know this has a lot of work to do, but I will get to it, and hopefully next time I make a video like this, you guys will see that. But I appreciate you guys watching, and until next time, take care.